All right. Welcome everyone. Okay, perfect. My sound is working. Welcome guys, welcome. Hey, what's up guys? Hello, hello. Well, welcome to Thursday's live stream. As you guys can clearly see on the title of the stream, we're going to be talking about consumer staples and the like. So, before I begin, what is consumer staples, right? So we have the official ticker symbol for the sector, right? XLP, or as you guys can see on your screen, the Spider Select Sector Fund Consumer Staples. So consumer staples are basically goods or products that people buy on a regular basis, right? It's something that people need, right? It's a necessity, right? So it's like food, drinks, personal care, products that people need, right? So your everyday essentials is basically what consumer staples mean. Okay, so those are non-discretionary products, okay, or consumer non-discretionary is what other people like to call it as well. Now, as we've been seeing lately, okay, as people are essentially becoming a bit more frugal and a bit more aware of their purchases, they've been focusing a little bit more into buying their needs, right? The necessities, the non-discretionary goods and services. And so this is the reason why we've been seeing XLP or consumer staples having such amazing amount of strength, especially during the very recent corrective pullback in the overall markets that began on August 1st. If we take a look at XLP on August 1st, we had a very positive day. Now, this isn't that new. XLP is considered a defensive sector, but if you take a look at other defensive sectors like energy, healthcare, even biotech, and financials, they've had some rough weeks. But XLP, on the other hand, has been having a major breakout. In fact, if we take a look on the monthly time frame, we have hit a new all-time high this month. And so this tells me that, hey, it seems like we're seeing regular, sector rotation, but at the same time, right, simultaneously, we're still seeing some of the fundamental plays coming into light here as, the market is recognizing that people are being a bit more aware of their purchases, especially when it comes to needs and wants, right? Splitting their money between needs and wants. And so, this will become a bit more of a headliner in the next upcoming few weeks as we continue to monitor the jobless claims data and also the jobs reports that comes out every single month. And so XLP has rightfully so, made a new all-time high this month, which is very, very good. Now, it seems to me that this entire week so far, all the stores that are involved in consumer staples, like selling people's needs and even just sometimes wants as well, mixed into that. They've been reporting very, very good earnings. For example, we've had Walmart, right? WMT. We also had Ross today, right? Ross stores, or not today, it was 2 days ago here, or yesterday. And actually it was, it's after hours actually. I believe this is the reaction to Target earnings. But even after hours for Ross had an amazing reaction to the upside, and TJX, right? Which is the company that is famous for TJmaxx, right? And also Home Goods and Marshalls, if you guys didn't know. So actually, I think the entire list for TJX companies is, so TJmaxx, Marshalls, Home Goods, HomeSense, and TK as well. So they hold all these quote-unquote sub-brands, but their major department store chain is tjmaxx. Okay, so that's a little fun fact for you guys. But XLP, this is pretty interesting to see because to me, this clearly tells me that, hey, if the markets decide to continue to correct, maybe into October, so obviously, as I've told you guys already, that we should be seeing an intermittent top being formed as we head into rate cuts after this bounce. But again, I've ideally already told you guys, well, maybe not to the public, but to my CFO Swinger Watch report members and the private CFO Discord members as well, that I should be seeing a new all-time high print. Ideally, that's what we want before, or at least at least maybe once we do get the rate cut, and then after that, after the rate cut has actually occurred, then we can see a more of a seasonal correction as we head into September and into late September, and into October. And so if that occurs, then consumer staples, just as a defensive sector, can continue to gain more bullish momentum and more favor as people try to add a little bit more stability into their portfolios as they head into that usual seasonal weakness into October. Does that make sense, guys? I've been basically just dumping a lot of information to you guys, but this is something that you guys should know and understand. Okay, so if that makes sense, make sure you guys let me know in the chat room, in the live chat room, and also by liking this stream down below. Okay, oh, I see you guys' hearts. Thank you. So with that in mind now, okay, like I've said before, and also in the actual title of the stream, we've been looking at Target and TJX, like I've shown you guys already. So all of these, consumer staples, consumer staple related stocks have been making very nice moves to the upside, and every single one of these companies that have been reporting have been saying that they're seeing that the higher income bracket people or families are now shopping in these discount stores, or just these quote-unquote cheaper stores where they have better priced goods and services. So that's really an eye-opener here, and these companies will continue to do well, not just because of the fact that people are shopping there a lot more now at these specific companies and these stores, but just for the fact that if we do see that usual seasonal weakness as we head into October, consumer staples will be one of the number one spots for investors to start pouring their money into, right? Just to provide the stability as they ride out a potential market correction again, right? Or that usual seasonal weakness in the markets. So, XLP here, consumer staples should be on your guys' watch list as we head into, I would say, until October, right? At the minimum. Okay, I mean, this is kind of speculative at best right now, but obviously depending on where we head into the first rate cut in September. But as just a precautionary step for you guys, I would highly recommend you guys continue to watch XLP from this point forward as we head into October. Okay. Now, I want to go over Target. Okay, so first of all, Target is a consumer staples stock. Okay, and it's a consumer staples stock, which is basically non-discretionary, meaning that, I'm gonna just go over this again for all the people who are just joining in now. Welcome, guys, welcome. That they sell products and services that people need, like basic essentials for living, right? For the average human to live. And so Target has seen the benefits of that, and I believe they've even said during the earnings call that they've been doing really well with offloading their supply, their oversupply of products that they've had, and it was a huge problem back in 2023 and 2022, as they've had way too many goods that they've ordered, right, during the COVID pandemic. And so they said, they've told us during the earnings reports 2 days ago that, yesterday pre-market, that they've been doing pretty well with offloading their oversupply of goods. So I think Target should be one of those stores that will be seeing a lot more bullish activity after their massive gap up that we saw from earnings. And hey, Lucky Bamboo, welcome. What do you think the market's movement tomorrow after the Powell speech? Okay, I'll go over that once I go over Target and TJX. Okay, hey, welcome, guys. So everyone who's just joining in now, hey, whoa, got a nice spike in viewers here. Welcome, guys, welcome. So for all the people who are just joining in now, I just gave a rapid amount of very important information, I would say, that you guys should know and understand for the next upcoming weeks and in the next 2 months or so, at least 2 months. Okay, so make sure you guys go back to the replay of this stream and listen from the beginning. I really highly recommend you guys do that for every single stream, but especially for tonight's stream. Okay, so for target here, okay, now let's go over target and let me go over a potential vertical spread trade that you guys can get, okay. So first of all, from the technical perspective on the weekly time frame, we have a massive, very massive inverted head and shoulders that is currently forming. Okay, so we have the left shoulder here. Now don't mind my crude drawing here, but I'm just gonna be very, very quick. Okay, so we have the left shoulder, the inverted left shoulder, and then we have the inverted or upside down head. And then we also have the currently forming, okay, right shoulder. So this is gonna take some time, which is the reason why I'm gonna look for that vertical debit spread trade. So this is a multi-legged option trade. And so specifically, okay, let me actually bring this out here. Oop, there we go, perfect. So let's do this all together, all right? So if you guys don't know what a vertical spread trade is, it's where you simultaneously sell and buy two different option contracts with two different strikes, preferably at a good spread, and also at the same expiration date. Okay, so there's a lot more to it, but that's just the general summary of what that is, if you guys don't know what that is. And again, if you guys need a little bit more help, make sure you guys DM me on Instagram at chartsfocus1. And if you guys do, and if you guys have any questions for me, I'll also provide you guys a 50% discount for your first 30 days to the CFO Swinger Watch report. All because, just because that you guys take your time out of the day to just DM me. Okay, so it's a little special thing, all right? So what I want to be looking at is specifically January 17th, 2025. So we have a lot of time, but let's actually make this into a spread here, or straddle, excuse me. So well, just judging by this expiration date, we do have a lot of OI, but I might want to have a little bit more time, especially regarding the fact that, you know, we're still looking at this inverted right shoulder to form on this massive base between 181.50 all the way down to, I would say, around 126.50, right? Obviously this inverted head is kind of popping out below the 126.50, but there's a massive base between these two levels, okay? 126.50 to around 181.50. All right, so with that in mind, and with the fact that there needs to be a lot more time for this entire macro inverted head and shoulders chart pattern to be formed and completed, I would try to go out further to you know, at least, you know, maybe even June 20th, 2025. How about that? I mean, there's still a good amount of OI. Actually, let's try to look at April as well. Yeah, that's what I thought. So June is a lot better. Okay, so as you guys can clearly see here, right? So we have, well, basically, I might just be looking at, you know, maybe the 200 strike call option here, and then most likely sell this one to finance a more expensive, more in the money or closer to in the money strike like 190, and that's a spread of $10. Now that's usually a spread that I wouldn't like, especially on a stock like Target. It doesn't really have a high beta. I would actually like to have a nice 5-point spread between the two strikes, but since this is a longer term vertical spread trade, you know, I don't really mind the 10-point spread there between these two strikes, but this 200 strike call contract and 190 call contract or strike call contract can work out. So what you would do here is basically, again, go to this June 20th, 2025 expiration date and sell the 200 strike call contract and then buy the 190 strike call contract. So again, you're financing this contract, you're financing the 190 strike call contract, okay, by selling this 200 strike call contract. And so basically, your cost basis for your initial position for this vertical spread trade position here will be simply $785 minus $430. So that comes out to only $355. And also, your risk and your profits are capped. All right, so that's great. Not obviously from a perspective of the profits, but you know what you're about to lose. right? And also compare to, let's say, maybe you want to get a naked call contract, right? 190, right? You just want to just buy one single naked call contract. You'll be risking $785, assuming that you do get this contract at this closed price, premium, or this closed premium price for today, and you'll be losing $785 guaranteed, right? If things go haywire and target just absolutely plummets to the ground, compared to the risk of $355. Right, that's a big difference. Okay, so these vertical spread trade or vertical debit spreads, excuse me guys, are definitely a way to minimize your risk. Right, it's a great way to manage your risks, especially when you're doing options trading, and definitely a great way to manage your risk. Right, just overall risk management is really good when you're using vertical spreads, right, or vertical debit spreads. Okay, I personally like to call it vertical spreads, but everyone likes to have their own names. Okay, so for target, I would definitely take a look at the 200 and 190 strike call contracts, okay, for a spread, and it would make sense on a technical perspective as well. And even now, I would say that's a bit conservative, but hey, from today's closing price, right? I mean, a simple, well, quote unquote, simple move to 200 is over 25%, right? It's nearly 30% if you try to round up from 27.68-ish%. Okay, so that is something that you guys should consider. With this inverted head and shoulders chart pattern with a massive neckline resistance level at 181.50, there is a good chance that this is going to have a very great breakout once this entire macro chart pattern is completed, and we can have a nice run up to 200, completely maximizing the profits that can be earned on this very nice vertical debit spread. Does that make sense, guys? If that makes sense, make sure you guys smash that like button down below. And for everyone who's just joining in, I still see people joining in. Welcome, guys. Welcome to tonight's Thursday's live stream. But you guys are a little bit late, but I did go over some very, very important information in a very rapid style. So make sure you guys go into the replay or the recording of the stream. It'll be very important that you guys understand what I've told you guys tonight. Okay, makes sense? Perfect. Welcome, Joel. Welcome, Joel. Welcome. Now, lastly, for the two tickers that I want to go over, okay, TJX. So what a massive run up. I mean, even I was looking at this back in 2023, and this one, guess what? I have this one in the longer term longer term position, right, in the longer term account. So a little secret there for everyone to listen into publicly. Right, so TJX, long over 82.50. Amazing run up since then. Right, massive run up. So if you guys want to know the returns here, you guys can simply just take the ruler out on TradingView, and let me actually make sure we go to the closing price of today. Bam, right? 43.93%, or about 45% is what I would say, based on my cost basis for the principal position. Alrighty. But now for TJX, it's the same dealio, right? Same deal. Amazing earnings report. Very bullish. Very nice beat on both, right? It's a double beat on earnings and revenue, and it had a very similar story compared to its competitors, right? So now TJX, simply, like I told you guys before earlier, TJX Companies is indeed the company that runs the department chain, okay, the store chain tjmaxx, but at the same time, if you guys didn't know, little fun fact, it also runs Marshalls, Home Goods, HomeSense, and TK as well. But I'm pretty sure most of you guys have heard tjmaxx, Marshalls, and Home Goods, right? Those, well, it's a trio. It's a famous trio that TJX companies run, right? That's what they run. All right. So now TJX specifically is a consumer discretionary stock. Okay, so it's not a non-discretionary stock. So what that means is this company Basically, they sell goods and services that are more of, it's more of a want, right? So it's not a consumer staple stock, but it's a consumer discretionary stock. Because again, consumer staples also means consumer non-discretionary. They're kind of synonymous, right? People like to use them interchangeably, right? So consumer discretionary means that they sell goods and services that are more of a want for people, not a necessity. So for example, like makeup, right? Beauty products, clothing, right? I mean, clothing is a necessity, but once people want to, buy more clothes for themselves for no reason, right? That becomes a want. And obviously, for example, like home decor, right? People that want to decorate their homes or whatever, right? And let's see, what else? Jewelry, right? Jewelry, sunglasses, even though that should be a need. We need to protect our eyesight, but stuff like that. Right, stuff like that. Does that make sense, guys? Right, so people usually get confused with that. I was initially confused at first when I was first learning these things, but consumer staples usually means, right, it's consumer non-discretionary. Okay, it's more of what people need. They're the basic necessities for people to live. And then for consumer discretionary, on the other hand, it's what people will want, right? Not exactly a necessity. Does that excuse me, guys? Does that make sense, guys? Let me drink some water as I wait for an answer here. Hey, 7 likes. Thank you, guys. Thank you. And for any newcomers here, make sure you guys subscribe to the channel as well, because we have these live streams every single week, right? Tuesday and Thursday. And obviously you guys can hit that notification bell as well to know when I am live. But again, the schedule is the same for both days, 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. We've been getting a lot more viewers and subscribers recently, so that really tells me that you guys are enjoying what I'm telling you guys, and you guys are able to find this information valuable, but not just valuable, most importantly, applicable. Okay, so it really tells me that you guys are really enjoying these streams when you guys tune in, like the stream, or comment or leave a comment on one of my videos. It really lets me know what you guys like, and so I can lean more towards those type of videos or topics or anything that you guys are showing more well, if you guys are showing more likeness to, right? If you guys are favoring a video more than the other, I would know, because you guys are watching it and you guys are liking it. Okay, so it really helps me and it really helps you guys out as well. Okay, awesome, Lucky Bamboo. I like your username. So now let's go over TJX. Okay, so this one obviously is a long-term position for me and possibly many others, but this one had a massive breakout of a very nice flag here. Okay, I'll take that back. It's not really a nice flag, but it is a good flag. It's a nice consolidated flag. And thanks to the earnings report that came out yesterday morning, same with Target, we also saw that big jump in consumer staples as well. Okay, right here. Okay, TJX definitely had kind of the similar, or I would say the same reaction and results as Target did. And what I like about TJX is that right now, currently, we are now forming a very tight consolidated flag. Okay, if you take a look at the 2-hour or just even on the 4-hour, it looks very nice. Now, obviously, if we take a look at Target, it's kind of the opposite, right? But I can't really blame Target. It moved a lot more compared to TJX, just from an observational standpoint. But again, if you guys want to take a look at the percentages here, right? So it moved up 15, well, almost 16% compared to TJX. Okay, I think it might be almost the same. No, it's not. Oh, my eyes are playing tricks on me. So almost 7%, right? So what we're looking at here for TJX is that it's been able to hold a lot better compared to Target, But again, Target has moved a lot more compared to TJX, so you guys can't really compare these two. But Target still has a lot of potential left to provide us with a nice entry point on that vertical spread or vertical debit spread trade that you guys want to take a look at. Okay, so for TJX now, this one's a little bit harder, and the reason for that is that this one is in new all-time high territory, right? And so that makes it a little bit harder, but that is where these vertical debit spread trades, or again, I like to call it vertical spreads, they can be very useful, especially during a time like this when the share price is in uncharted territory. So again, take a look at the TJX options chain. Bam. Okay, if I can correctly type that in. Jeez. Let's straddle that as well. Straddle. So I want to take a look at the same expiration date here, and for TJX, since it is at all-time highs, anything can happen. So I'm gonna choose a little bit more of a closer expiration date. Yes, it's still next year, but we only have a few months left of this year, guys. It's pretty crazy, right? But TJX for January 17th, 2025. Now, we'll do this together just like what we did with Target. So for TJX, what I want to be doing is, since we are already at new all-time highs, I would assume that we don't have too much of a massive run-up left, right? This one has gone up, well, since from my entry, right, 82.50. Okay, it's been up almost 45%. Just from the monthly perspective, this definitely needs some sort of a pullback, right? But there's still a trade at hand here for us to take. Okay, there's still an opportunity. So with this vertical spread trade, okay, I will be looking at specifically this 125 to 120 strike call contracts. Okay, now why it's so close to the current share price? Well, again, we are in uncharted waters. We do not want to be assuming that just because we're at new all-time highs, we can continue to blast off to space. Okay, you cannot just simply assume that and say, okay, well, just because we're in all-time highs and earnings are great, I'm gonna go way far out to the money. Okay, but at that point, we don't even need to look at a vertical spread trade, because the premium is very, very cheap, and it's a good reason why. There are many reasons why it's cheap. If you guys don't know why, DM me on Instagram. Okay, it's a pretty simple reason, but there are multiple reasons. Okay, but anyways, this 125 again, we'll be using it to finance the more expensive, closer to the money or at the money contract of $120. So this $674 contract. So what you will be doing is selling the 125 strike call contract and then buying the 120 strike call contract. Now what's pretty interesting is that it seems like someone already had on a vertical spread trade using the 105 and 110 spread here. How do we know this? Well, because the OI for these two contracts are very, very similar. Very similar. Okay, in fact, I'm pretty sure maybe some people bought, or someone bought 3,000 contracts each to open up this vertical spread trade. Right, so they used the 110, okay, to finance this more, well, slightly more expensive call contract of 105. Right, and so it seems like these people are still holding after a massive run up from earnings and whenever they bought it. But hey, congrats to them, their spread is now at maximum profits as well, because again, we are way over the strike price of 110, because the share price today ended at 119 flat. So again, for 125 and 120 will possibly be a very good vertical debit spread trade for TJX. And again, why are we so close? And also, again, first of all, as I said earlier with Target, I want to be looking at a typical spread of $5 in between the strikes. Okay, that's kind of my ideal difference that I like to have for my contracts whenever I do these vertical spreads. Okay, so for TJX again, this one is a little bit shaky. I would much rather take the target vertical spread trade, but this one still can work, as a matter of fact, right? And if it continues to flag out like this, instead of filling the gap rapidly in the next couple of weeks or next couple of trading days, this one can continue to stay within the range of our spread of 120 to 125 and possibly even hit 125 before seeing whatever massive rejection that it might get. I don't know, who knows what happens in the future. Okay. All right, so that's kind of it for what I wanted to talk about in the stream for tonight. But Lucky Bamboo, I'll go over what you asked me there in the chat. But guys, again, if you guys are just joining in, and welcome guys to everyone who's joining in now again, make sure you guys go back to the recording or the replay of this stream. Very, very important that you guys do that, because I just spout out a bunch of important information in rapid fire mode. So you guys really should go back and watch the replay, and make sure you guys smash that like button down below as well to know that, well, to tell me that you guys are enjoying these type of content, okay, and obviously these type of information and data. Okay, so Lucky Bamboo, what do you think the market's movement tomorrow after the Powell speech? So here's what I told my CFO Swinger Watch report members and private members of the private Discord earlier today, day after the market closed. So basically, first of all, just to set a baseline here, everyone is expecting Jerome Powell to be a bit dovish, just like he was in the most recent FOMC meeting, which was, again, if you guys forgot, from July 30th through July 31st. And so basically what they want to see is that Jerome Powell is basically giving the go-ahead for the official first rate cut in September's FOMC meeting. Now, for me personally, what I want to ideally hear, and again, I've already told this to my CFO Swinger Watch readers and private members of the Discord earlier today, that I would want to hear Jerome Powell specifically talking about how much they're willing to cut and how frequently they want to cut as well. Because again, we have 2 more FOMC meetings left after the September's FOMC meeting. Again, we only have basically, currently right now, 3 FOMC meetings left: September, November, and December. And so, I really want to see if Jerome Powell hints at a larger, cut, for example, a 50 basis points or maybe even a 75 basis points. Because again, there are reasons that I've specifically said to my CFO Swinger Watch readers a couple weeks ago, but I will reveal that possibly next week to everyone else. But it's very important what I've said about 2 weeks ago. So for any members and readers who are watching this right now, make sure you guys go back to the previous watch lists and, not watch lists, the previous reports. All right. So for Jerome Powell tomorrow, again, if he decides to hint that they might be hinting at a 50 basis points rather than the expected and more anticipated 25 basis points rate cut, that will definitely move the markets. So again, I generally think that the markets will move to the upside if Jerome Powell is dovish. But there are nuances that I have told my CFO Swinger Watch readers about 2 weeks ago, okay, regarding specifically not Jackson Hole, but about the future rate cuts and the potential rate cut cycle that we might be, delving ourselves in. But, if you guys want to know what that is, make sure you guys DM me on Instagram. Again, DM me on Instagram for anything. Okay, my handle is @chartsfocus1, just like for YouTube and for Twitter. or X. So make sure you guys give me that DM. Shoot me a DM. So tomorrow I am fully expecting the markets to just react in a very positive way, because again, I don't think Jerome Powell has much of anything to say in a very hawkish way. Everything is going their way so far from the Federal Reserve. The labor market is loosening up. We're starting to see the cracks getting wider and wider, with unemployment numbers going higher, unemployment rate also going higher, the percentage. We're seeing jobless claims going higher as well. So, things are going their way. Remember, they had a dual mandate: bring inflation down and loosen the labor market. Right, the very tight labor market that we've had since 2022. And also for inflation as well, since late 2021 and early 2022. Okay, so again, Jerome Powell is going to talk about that dual mandate again, most likely. That's all that he has been talking about for this entire year for FOMC, for every single FOMC meeting that we've had. And I'm pretty sure he's going to kind of quote unquote update his usual speech by maybe sprinkling in the potential rate cut or cuts in the near-term future, because again, we only have 3 FOMC meetings left, or most importantly, after we do get that official rate cut in September, we only have 2 FOMC meetings left, and depending on how much they cut in September, again, the anticipated rate cut is 25 basis points on BP. They may just hint at a 50 basis points for November, or maybe even for December. Maybe they pause in November and then start the rate cut again in December by hitting us with the 50 or even 75 basis points. Who knows, right? But those are kind of the ideal scenarios that you want to be looking at. But again, the frequency and amount that they cut and that they announce that they will cut will matter. And if you guys want to know what that means and why I'm saying that, make sure you guys DM me on Instagram at ChartsFocus1 to get 50% off for your first 30 days to the CFO Swinger Watch report and access to the private CFO Discord. Okay, I can guarantee you guys it is worth it. I believe I have some members here now who can tell you that it's worth it. Okay, so it's not just coming from me, it's just coming from the people who actually read the report every single Sunday night and also are part of the CFO Discord. Okay, so that is it for tonight, guys. I really want to go give you guys a little bit of a more insight into a specific sector like consumer staples, since people do tend to get a little bit confused. But once you guys get the basic information, which again, that's all you need for consumer staples, and kind of figuring out what consumer, non-discretionary, or discretionary means, it gets pretty easy to understand, right? But overall, these are defensive sectors that continue to see some amazing bullish flow from options, and also just a lot of good money inflow. All right, so yeah, I mean, that's it for tonight, guys. Literally, that's quite it. Thank you guys so much for watching. The live streams will be back again on the regular schedule next week on Tuesday at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Thank you guys so much for liking the stream. Thank you guys so much for tuning in, and thank you guys so much for watching this entire stream. Have a good rest of your night and good luck tomorrow.